Now what's positive going on around us? New housing starts flat with a slight uptick. This is good. New permits are starting to come out of the woodwork. All of the builder developers that had these huge tracts of lands they paid a ton of money for, Stu talked about a sale of a cabin that was $750,000 that sold for $210,000. There were also builder developers out there that had leveraged themselves into multi-million dollars worth of tracts of land. Those have now been taken back by the banks. The banks are now trying to take those back into the marketplace, and they're coming back in the marketplace not for the tens of million dollars they were purchased for. They're coming back in for, well, in some cases, 40 or 50 cents on the dollar. That means that they'll be able to go back and begin to build again in those marketplaces. And what's good about that, the value of the house they're building will be less than the value of the house they were building because of the cost of the land. So it'll make it easier for the buyer to get in and purchase that property, which is interesting. Remember, those that are associated with the builder developer will have less competition in the marketplace because there aren't many builders that are building right now. I think the forecast is around a little over 300,000 new units this year. Oil per barrel is around $60 to $70 range. The demand is still below the supply. However, as the dollar loses value, oil will inch up. You know, the dollar is tied to oil. As the dollar loses value, oil goes up, right? As our government begins to work to help our dollar to strengthen, then the cost of oil will go down. But right now, they have tankers sitting offshore full of oil and no place to offload them. Did y'all know that? Yeah, there are tankers offshore right now, anchored, waiting to offload, because right now we're still not chewing up the oil that's available. By the way, why is that important for the consumer? That's right, the price is going to stay low, Stu, and it's going to stay low probably for a while. We may see some inching up. It might get up into the high 70s, low 80s, but that still won't have much of an impact on us. Gas at the pump should still be under $3 a gallon. If it stays under $3 a gallon for the next 90 days to 6 months, I think we're going to see that continued uptick I was talking about in the consumer wanting to purchase housing. You know, in your market, Stu, you know, where it's been a heavy second home market, the start market breaking 10,000 is going to help people to come back into your market. It'll impact the villages, it'll impact Key West. Because now the people who have lost on paper so much money, they're feeling better because some of that money has come back. And now they feel they have some flexibility, whereas 6 months or a year ago, they felt they had absolutely no flexibility at all. So we're seeing that begin to come back in the marketplace. What is positive going on around us? Everyone needs to go through a period of deleveraging before conditions normalize. As I mentioned earlier, people are probably too highly leveraged. And they need to deleverage before the conditions normalize. That process will continue indefinitely until equity grows at a faster rate. We will see some increase in property values, but it used to be, if you looked at the inflationary rate, if inflation was running at 2.5% to 3%, what would the value of property go up per year? 1.5% to 2% above that. Would you all agree with that? It usually stayed 1.5% to 2% above that. We need to keep that creeping. Well, one of the ways that has that happen is we don't have inflation start to run. And right now, inflation is flat, and one of the reasons is there's some deflation out in the marketplace. 2 years ago, you could buy a flat screen TV, 50-inch, for how much? $3 grand? What are you paying for that same television right now? $1,000 or less. And that's a pretty large ticket item. And other things have had some value, purchase value decrease over time, which is a little bit of deflation, but we just don't see it. All right, now the federal government has been taking the failed assets. Those are the subprime mortgages that were kind of hidden. They began to go through these assets and pull out the bad ones. They put it in what they called a bad bank. Well, that's to cleanse the market of junk assets, and they thought somebody was going to buy that bad asset so they could get it off the books, right? But the process is creeping along because funding is still not being provided by the good banks. So it's okay to have a bad bank to hold all the assets, but the good banks won't loan the money so you can buy the bad asset. And the people that are buying the bad asset are trying to purchase it at what? Pennies on the dollar, right? And the banks are having a little struggle with that. How many have seen a situation where the bank took back a piece of property? I'll just make a number up. The property was worth $1 million when they tried to take it back. The owners of the property began doing everything they could to be able to hold on to that property. They were negotiating, working out deals, and so on. And finally, the bank says, no, we're not going to do it. I mean, they even had a short sale offer come in for, say, $850,000 on $1 million. So the bank says, no, we're not going to do it. We'll take it back. They take it back. The people that are managing it don't understand how to manage it, how to market it, and what does that property really sell for? $400,000. That's a true story. You're nodding your heads like you've been there. Right? $400,000, the bank messed up, right? Yet if they were thinking, they would have netted a much higher return. So anyway, that's why this is struggling a little bit. The folks that are working at the banks really don't know how to manage some of these assets they're bringing in. So that's going to go on for a while. In the future, inflation might outpace growth. This happened in the early 80s. You know, the great thing about our industry is it's part of Maslow's hierarchy of needs. Do you remember Maslow? He came up with a whole bunch of them, and there were 3 at the very top. One was what? Food. Another one was clothing. What was the third one? Shelter. Right, housing. People are always going to need housing. Now, you may have heard me tell this story before in the past, but I'll tell it again. Back in 1982, I was on a group staff in Baltimore, and they came into a group staff meeting, and they said, you'll never believe this, but in 1981, a third of all properties that sold and closed had wheels on them. Mobile homes. And you know, you couldn't buy a mobile home through a realtor back then. You had to buy it through what? Car salesman. Maybe today that's still true. So you would buy the mobile home from a mobile home dealer who had a car license and not a housing license, right, like we have. They would drive it off the lot, and it would be worth what? Less than they paid for it, just like a car when you drive a car off the lot. And yet a third of every property sold that was a house that you could live in had wheels on it back in 1981. Well, actually it was 82. And the reason is that Volcker raised the discount back in October, I think it was the 14th, 1981, from 10 to 12%. He jumped it 2 percentage points and shut the market down. Everybody at that time was floating the mortgage rate. Gosh, at 10%, you know, we've got to have less mortgage. The value of the mortgage cost has got to go down, so everybody was floating the mortgage. When that went up 2%, nobody could afford to purchase what they were floating, so all the transactions fell through. So for 60 days, there were no closings except for cash deals. Now, what's going to happen when inflation begins to outpace the growth of the housing market? Remember we talked about earlier, housing used to do what? Used to outpace inflation by 1.5% to 2%. What's going to happen when inflation begins to outpace the value of the property growth? Market's going to drop. Interest rates will go up. But what's going to happen to the transactions? They're going to keep going. Instead of somebody buying a $250,000 house, they're not going to have to squeeze into what? Or 220, 225, 185. They will continue to buy housing. What we have to do is shield ourselves from having the oh woes is me's as this economy begins to change and we don't respond to it. People still need housing. What we have to do is respond immediately to say, what is it that they can't afford, and let's go find it. Because they're not going to quit buying because inflation is outrunning appreciation. That's already been proven. We will still be in the business. What we have to do is adjust our thinking so that as we talk to the consumer, they feel as positive as we do about making that purchase, even knowing their property values are not going to appreciate at the rate of inflation is. We're always looking for ways to make the system work. That's just the way Americans are, right? We have to figure out a way to make the system work. So yeah, entrepreneurial creative thinking is going to adjust the outcome when that begins to occur. You're going to hear all the negatives roll over the top of it. I want you to hear that they're coming and stand firm, just like if you have a tsunami tidal wave rolling all over you. Let it roll over you. Let it wash back, but be standing there. Be firm. Be on a firm foundation on your thinking, so that when all that occurs, you end up saying, okay, now that that's occurred, how can I go back out and reach the buyers and sellers and let them know it's okay and let's continue the transactions? So I want you to be thinking about that. Each market will respond differently.